Okay, welcome back everyone. We're looking for a change here on euro dollar, and there's literally less than a minute left for news to hit, for high impact news. So I want to short this. Let me explain then later why. The spreads are pretty high right now, my broker. So it filled me in about here, yeah. So just using a 10 pip stop loss. Why I'm shorting is obviously because we have this low here, and I'm just going for a 2-hour trade is fine. Well, this might actually happen very quickly. Momentum is pretty strong. Let's do a little bit more. 2.3 is good. 2.3 R. That's my typical ratio, anywhere between 2 and 2.5 R trades. So at this point, my stop is going to be at break even already. It's really happened fast. Five. There we go. Almost there. So let me just make sure. I want to close the trade also on my computer, my phone. So I'm managing it all in the same time. And then I'll explain in details why I felt like this was a short. Almost there. Let's look into 1 hour. 1 hour, we have the imbalance right here with a down close candle also. So this is your liquidity pool, high time frame liquidity pool. And yep, we are done here. It's good enough. So okay, I closed the trade. You see this was very quick. Yeah, the spread put me at a lower price point. Spread was pretty high at the moment. I think the actual price was somewhere, I don't know. Anyway, it doesn't matter. Spreads were high, so I didn't get the best fill. And obviously, well, the stop loss was just above this high in case I wanted to spike a little bit more above this here. And essentially stop was above this high, so we're like very well protected. We have like this high here, and this high in case I was wrong. And this was a very quick trade for 23 pips. Actually closed, yeah, closed pretty much 24 pips, so not bad. So let me explain the reasoning for the trade. It was fast and easy. Again, high impact news. Indices were really not that interesting today in the opening, so at least I didn't find what I was looking for based on my understanding of price action. But anyway, let's look at euro. We had this decline, steady decline, since pretty much the high of the London session. So the high for the day, and we saw a decline. And obviously the price was right before 10 a.m. Eastern time, high impact news. The news were, I believe, what's the name of the news? ISM, yeah, 10 a.m. ISM Manufacturing Index, PMI. So price, a lot of times, this is also something I picked up over years of trading. A lot of times when I see price just failing to break a significant low, and this is obviously a significant low, previous day low, if it's just hovering around right before high impact news, usually this is, they just you know, consolidating, failing to break the low. Usually at the very last few minutes right before the news release, you'll see some retracement up and then a drop, and this is literally what happened. You can see that in the last 2 minutes, 9:58 and 59, we had a 7-8 pip spike. Obviously it's not really a spike, but like a retracement higher, and this is where I wanted to short actually, but I got to my computer and my platform a little bit late, so I shorted right like a few seconds after the news hit. So anyway, this is something, again, just from my own experience. I believe that we had to take out this low, previous day low, and if you look at the 1 hour chart, what do we have here? The closest liquidity pool. You can look at this imbalance also here, but it's just so kind of close to the low that it's, you know, I'm not as interested in this imbalance as I'm interested in this imbalance, because this, first, it's obviously, it's much larger range, right? It's a big imbalance, and we have a down closed candle right before it. So this imbalance, these types of imbalances usually are like a much stronger magnet, from my experience, and this was why I was looking to exit around here. So basically at pretty much where is this? Pretty much midpoint of the imbalance right here, somewhere here. This is where I wanted to close. So this is enough for me, and you can see this played out in just a few minutes. So the logic was simple: liquidity pool in terms of previous low, a high time frame 1 hour strong imbalance with your down close candle, and the fact that price literally was just stagnating right before the news, kept pressing lower but then retraced. Look at the candles, look at these 15-minute candles. When lower, came back pretty much in the 50% of the range of the candle. When lower, closed as a, what do you call it, as an indecisive candle, I guess that's how you call it, right? So all those subtle things. And also in bearish, another thing that's important is that in a bearish market, down close candles, they support lower prices, right? If price reacts off down close candles, as you can see here, let's remove all of this. Up close candles, the opposite. Up close candles serve as a, again, stop sign for price. Price bumps into them and goes lower. So that's your order block. You can see that bullish candle, price literally reacted off of it very nicely, broke lower, came back above, started going lower. Again, another up close candle. I like to mark the bodies because that's where the volume is. And the wicks on, again, the bodies are usually more accurate because in different brokers there can be slightly small differences on the highs and lows, you know, but just by like maybe some micro pip. But the bodies usually are more precise. So you can see clearly also this up close candle, price broke below, and it just, there was wicks and tied deeper in the body, but all the bodies closed below this candle, and all the bodies also closed below the low of this candle. So this was my tell. This was me understanding price action, seeing it so many times, and remembering how ICT mentions that in a short environment, up close candles serve as a sort of stop sign, right? They support low prices, and the opposite goes for higher prices. Down close candles support higher prices, right? So that was the idea. You can see it was a very quick trade. I literally kind of had to rush to make sure I get in, and I didn't get my best. While I was starting everything up, I didn't get my best fill, but still gave me a chance to get in few seconds after the news hit, so that's good. So that was the idea. Again, some of those things there's no way around it. You have to have your own experience seeing those things over and over again, spending thousands of hours on the chart to see this happen. And it's really, I mean, it's impossible to teach experience. Someone can teach you their trading strategy, but first, that trading strategy just might simply not fit your personality, right? Or even if it does fit your personality, it doesn't mean you can go in right in the markets and start making money because you simply lack experience. There's a lot of subtle clues in price action that just can give you eventually, if you spend enough time on the charts, that give you confirmations that basically I was selling in a deep discount. But again, price never reached this low and there was an imbalance, so it made sense for me. And you can see this was actually, I mean, it kept dropping. If I held, this would be probably a 4-hour trade, 40 points. But again, I'm just showing you the way I trade. Most of my trades are between 2.5 hour trades, and that's what works for me. I can take several scalps throughout the day and be done with it. All right, so with that being said, this was a good short video. Hopefully you learned something, and yeah, let me know what you think. I'll talk to you next time. Everyone have a great day. Today is the 1st of September, so summer is officially over, and yeah, I might also do some more videos on Forex, because all of the live videos were really just on indices. So I know some people asked to look at Forex, so here you go, first video on euro dollar, and we'll see, maybe I'll get some more of these going forward. All right, so that being said, take care. I'll talk to you next time.